Do you see when other people come in?
I do. So we're recording now. And everybody, if you're coming now live, great. If you want to come back and watch this, great. It's Cheryl Brown at Females in Finance. I hope everyone is doing well. And I appreciate you rallying around one of my favorite male allies and giving feedback on a presentation that he not only wants to provide today, but he'll talk to you about the possibility of doing some additional ones of these. And so all your feedback, please, please, please make sure it is either sent to me. You can either private message me or email me, Cheryl at femalesandfinance.com, and I'll share it with Paul. Paul Cella is on this call. He is the CEO of the KeyArx Group, and he is in Red Bank, New Jersey. And he has not only been a great male ally to all of us, but he has actually been a personal friend of mine for about 10 years now, which is kind of crazy when you think about that number out loud. I didn't realize it was that long, but then I saw pictures of your children, Paul, and I realized they're not children anymore. These are grown-ups, as in you're paying college tuitions now and stuff. So it's a little bit nuts. I'll let you sort of take the helm here, but I'd love for you to talk a little bit about who you are, what you do in specialty, so that we get to know you better, and help us walk through what this presentation today about the endless flow of clients, so that, one, we solicit feedback from the ladies and they can tell you, hey, do this, do that, I like this, don't like that, and so we make a sharper presentation. But two, talk about maybe some of the additional resources that we can be tapping into at the KeyArx Group as a Females in Finance member too. So take it away.
Great. Well, thanks, Cheryl. I appreciate the time, and I appreciate working with Females in Finance. This today is a little primer on some areas that or some ideas that we want to share with Females in Finance, and hopefully we can make this a series. And I'll keep this one short, and I'm looking, and Cheryl and I are looking for some feedback is this valuable for everybody, and we can continue on with some thoughts like this. Again, my name is Paul Cella. I'm the managing principal of the KeyArx Group, and I speak nationally. I'm kind of known as the DI guy, disability guy around the country. And what I do is I helped in the enhancement and the design of a disability plan that currently insures over 135,000 physicians nationally. And I distribute that program to top advisors around the country. The advisors to me could be an RIA, investment, asset under management person, property and casualty, could be a life person, benefits person. Those are typically the people that we focus on and help them with their practice. So today, my first idea was coming out. I've done this talk with a IMO on the West Coast about a year ago, and I call it a flow of endless clients, and how one of our flagship programs, our group disability program, how it's a great entry point. It's a gateway to taking a client you may have with a law firm, a physician practice, or a white collar practice, any professional or group of professionals that are making significant dollars, or the executive team is making significant dollars, anything usually like 500,000 and up. And that's where we can shine, and we can use this program, or you can use this program as an entry point to get to the other executives on the team. So I always like to tell Cheryl, being a New Jersey guy, is everybody has their guy, right? Or ladies, everybody has their person. And at the end of the day, I use the example, if you have let's say you have a doctor, and he or she belongs to a practice, and there's 5 other doctors. You may have the assets or the insurance on the one, but you may not have the other 4. This program is something that all 5 of those doctors have to do together, and we show them how we can help them out dramatically and increase their benefit levels. And then the pivot occurs, and then hopefully the advisors I work around the country, I show them how they can pivot to other things that they may want. If it's a life person, getting more life insurance of the other 4 people, or assets under management. So that's what this program's all about. So people ask, what do we do and who do we serve? And the basic, as I mentioned, the basic idea is we design custom disability and life insurance programs. And most of our revenue is made from the life insurance, but 95% of the insurance revenue starts with the disability as the entry point, or the gateway that I like to say. High income earners, as I mentioned, and business owners. And this is a concept that I like to talk about. I think if you can treat disability as an executive benefit, most people buy their disability or their long-term disability, the company gets it through their health person, their health professional, who usually health professionals do a fantastic job in that area, and they sell the disability, the long-term disability, as an afterthought, as a snap-on. And typically, as I mentioned in the slide before, I show in the slide before, 24%, I'll go back to that real quick. Does 24% make sense? And I use the example, if you have a group of executives that are making, let's say the top executives are making $500,000, most people will set up a disability plan that might be 60% of salary up to a cap of maybe $10,000 per month. And then if you look at it, you could say to that executive, hey, do you realize, if you have a $10,000 a month benefit, that's only 24% of your income covered, where the person that's answering the phone has typically 60% of their income covered. So I'll share with you some questions you may want to ask. So at the end of this, that you can ask your clientele and to open up the conversation. But the key is here's a sleepy area that's typically not done well. We can find savings, dramatic savings through our program. But if you could find those savings and redeploy the savings on the executive class and get their benefit levels up 40, 50, 60% or more, that's the goal. And typically the advisor that has brought them in, the ladies in the group, it shows well for you, and it allows you to pivot to other areas that you want, and you get a lot of referrals. So I mentioned who sells the LTD. And this right here, I have 2 case studies, and this will be quick. As Cheryl told me, let's just do a 15-minute blocks here. But this is a group, it's an orthopedic group of 26 orthopedic surgeons and 2 C-level people, a CFO, CEO running the group. And they have maybe 50 some odd employees. I did this group about 2 years ago, still on the books. But I picked this one out because if anybody here has a top earner, this group, the 26 doctors are all making about $1.7 million and up each. So how nice, if you had one of those doctors, how nice would it be to have access to the other 25? And that's the key. Well, simply put, on the current program that they had a $20,000 a month benefit for all the doctors. And I'll keep this simple. The monthly premium was about $21,000, and each doctor, if they became disabled, would have potential benefits of about $240,000 per year. So what I did is I came in, and because of our marketplace and what we do, we have general agent contracts with a number of benefit firms, but you can do this on your own with any contacts you have. But what we typically, because it hasn't been shopped in a while, most people don't look at this like their health insurance every year. You could typically find 20, 30, sometimes 40% in savings on the group. And in this example, we were able to save this group about $6,200 a month in savings. Now, that is like maybe people on the phone. I don't know about Cheryl's people on the phone, but maybe that's like taking a $20 bill out of their pocket. It doesn't mean much to them. But what I was able to do is take those savings, redeploy it back into the plan, and in this case, spend a little bit more, but I got them up to a $25,000 a month benefit from 20. And I added a long-term care rider, which the RIAs in the room and the investment people in the room, I'll spend a minute on this. It is so exciting. Any attorney, doctor, white-collar worker with a qualified plan will go nuts over this. So what it is we add this to every one of our plans. Assume you have a professional that has $500,000, let's say, in their 401k profit sharing plan. They're adding their $30,000, $40,000, $50,000, $60,000 per year of contributions plus interest. The 500 plus the 50, let's say, plus interest may grow to 2.2 million at retirement, and that's their nest egg. If you become disabled, however, those 50s stop, and now your 500,000 with interest may only grow to, let's say, 750,000. Our program continues, if you're disabled, continues to make those contributions as if you were working, so that you'll have that 2.2 at the end. So when we do an upgrade, it's not just the base benefit, it's adding the retirement benefit, which is a new conversation that most people aren't having. I would encourage you all to add this benefit. And I've actually seen professionals really light up. So for those of you that are in the 401k space or in the investment space, you may want to say, hey, does your retirement plan have a disability contribution waiver on it? And if not, let's talk about it. It's a great thing to say. Anyway, in this case, the actual monthly premium went up $1,700 a month, but I break that down. That's $61 per doctor and per exec for 360, 50% more benefits. So to spend another $700 for $10,000 a month in increase, each person would probably be spending, depending upon age, $8,000 to $10,000, maybe $11,000. And here it is, they're getting it for $700. The more people make, the more specialized they are, your white collar workers. At the end of the day, they understand and appreciate disability. And when you bring it up, it's not an often talked about area. So again, get back to the entry point. This is a case study that I thought the group would enjoy. Trust company that I work with, it's 75 employees. And again, don't necessarily get caught up in the type of group it is, whether it's trust company, but here's multi-locations, 75 employees, multi-locations. And the goal was to increase the benefit levels for the executives without really increasing the outlay for the employer. And everybody wants their cake and eat it too, right? Hopefully we were able to. I'll show you the result. It's really exciting. So what I had introduced is they paid for $7,500 a month of benefit for all the employees. And because they were paying for the bill, well, guess what? If they became disabled, every executive would receive that $7,500 per month taxable. So put it in anybody's tax bracket, anybody making some serious money, you're going to get 40 to 50 cents on the dollar. So the first thing I did is I made a tax choice, meaning I went to each employee, held some webinars for them, but this is the idea for you. Educate the population on why you want to have a benefit and pay for your portion. When we do the whole group as a whole, we can bring the average cost down 30, 40%. And if you tell the people, give them their piece to pay, well, guess what? You can have a tax-free benefit once you educate them on the importance. The end result was we had 78% of the executives all the way down to the rank and file sign up to pay for their own benefit because now they understood the tax-free nature. It was an education. The employer saved 12% on their long-term disability cost and over 40% on the short-term disability cost. So they wound up saving money on their outlay because the employees were picking up their portion. Overall, we increased the potential benefits for all of the executives 133%. So long and short, they had a $7,500 benefit before. We ended up doubling the monthly benefit. We added the retirement provision, which they got very excited over, for $2,500 a month. So their potential benefits to the executives increased from 90 to 210, increased the contract, added own occupation to 65, not for today's conversation, gave them the election to pay for it. That's the tax-free option. And we reduced their beginning date from 180 days, having to wait 6 months, to having only to wait 3 months, which is dramatic. So much improved contract. So what I did, and this is something that I would, just giving you an idea here, Cheryl's going to distribute this to everyone. I take the person, I took out the salaries and the names, obviously, and their ages, male and female, make this up. I have their current, their potential benefits, retirement benefit that they would receive, the monthly cost with what we were able to get on a discounted basis. Here's their dates of birth. And then the IDI stands for individual disability income. NA, if you're over 65 or 62, you're not eligible for it. And these are the costs in the open market. So now you can see each age and what the cost would be. So if you had a person, $68 sounds great, but when there's no vantage point, value is meaningless unless you compare it to something. So we put these together for people. I would suggest you do the same. Last thing that I wanted to share is things that you may want to think about or questions to ask key employers or key contacts you have. When is the last time you had your disability plan reviewed? Does your disability plan continue to make contributions to your profit sharing plan, your 401k or your defined benefit plan? 401k have a disability provision, and you're hoping you'll scratch their head because I'm telling I'm telling everybody I do this all the time, and only a handful of times out of thousands of plans have ever had anybody that says, "Oh, we have that." And then what I could say is Females in Finance has a source that can typically increase benefit levels without increasing your current spend. So you could show them what their spend is, how to save the money, apples to apples, and then column 3 would be the increased benefits. So those are some things you might want to say. If this makes any sense to any of the ladies on the phone, Cheryl will be happy to answer any questions, talk about how we can align. And if you want my help, I'll answer any program questions. If anybody just wants to do this, I wanted to hopefully share the idea with you. And if anybody just wants to know where to go for resources, I'm happy to put those out for you. Either way, I just want to be a helpful hand to Females in Finance. So Cheryl, that's today's chapter 1 of hopefully a few others.
I appreciate that. And I have to tell those who listen in, again, feedback is great. We want that so we can make the chart. Second, I have worked with Paul a long time and have actually worked on some of these cases with Paul over the years. And that's actually how we kind of came to know each other. And this is something that he said it best, male or female, it doesn't matter. Your client base is your client base. And these strategies work. I mean, I've seen it over and over again, and I have made introductions to Paul to many people, which I'm happy to make for anybody listening in. Our number 1 is the feedback on what you saw here today. An introduction, if you want it, I'm happy to make it to Paul, and he can work with you on this and any other questions you might have in this space. But I'm grateful that you took the time today, Paul, to walk through this. And it's kind of nice to be able to, usually Paul and I have like friendly conversations, and now today it's nice to be able to see some of his work in action to benefit us as well, because I get the pleasure of seeing it on the other side whenever I go to conferences and somebody says, "Oh, I work with Paul. I know Paul." And so it's a fun space to be. So I appreciate you doing this, Paul. And with that, what we'll do is we'll go ahead and end it. If you have anything else, you've got his contact information here, and I can also make the introduction as well. So I'm going to close the recording out, and appreciate your time, Paul.
Take care. Have a great one.